Well, let's look at some of that data released over the European session.
Okay, so we start, as we often do here, with some data that came out very late last night, just before midnight UK time. The trade balance in Japan for July came in at minus 268.1 billion yen, so i.e. a trade deficit. That was massively different from the forecast we had of 63.3 yen, not billion yen as a deficit, and the prior read of just over 70 billion yen deficit. Now, what's strange to my mind is that they've been helped by falling oil prices, and exports actually outperformed estimates within the trade balance. But if you look at the data and you go back to all the way to mid 2013, they've only had one positive balance in that whole period. So despite some sort of positive headwinds, i.e. a big chunk of their imports being cheaper and their exports at least keeping up, if not modestly ahead of what's been expected, the balance of payments, or the trade balance I should say, is getting worse and worse, and I don't believe that can continue.
So they've got everything. They've got a bad number, even with everything tilted in the
Well, so it would seem, yeah, and a number that's so out of kilter that you have to question where it came from. Perhaps there'll be some kind of seasonal
from China.
Well, perhaps. I mean, maybe this is the read through, but I think we'll need to see, what the August figure is like in a month's time, and whether we get any sort of historical revisions. But certainly that's a cause for concern. An equal cause for concern, perhaps, is the volatility that we're seeing in Chinese equities. Now, they rallied into the close to stage of sort of 2% bounce, basically, to finish 1.22% up on the Shanghai Composite. But that kind of volatility that we're seeing intraday now, down 6% one day, a 2% range the next day, it's becoming quite concerning. And as we talked about before we came on air, I think China's going to become, as you do, a bigger and bigger headache for the rest of the world.
Well, the only good thing about that is that I suppose it helps make the Greek situation look relatively pedestrian in comparison. So
yes.
It's sort of replaced it.
Yep. So as you say, if there is a silver lining, it's the fact that Greece looks minuscule in comparison. The latest chapter in the Greek story is that German MPs have voted on and approved the third Greek bailout, despite the German reservations, which Mr. Schäuble expressed, i.e. no possibility of a haircut. Remains to be seen if the final terms, which are meant to be thrashed out this evening amongst EU finance ministers, will be good enough or sufficient to allow the IMF to take part. Assuming they are, then Greece will get 86 billion euros in the not too distant future, or a further 86 billion euros, I should say. And then perhaps the EU and the Eurozone and the ECB can turn their attention to a very disappointing construction output figure for June. It came in to down 2.3% against the prior read of plus 0.3, and with obviously QE meant to be stimulating the domestic economy, you'd like to have seen
just a massive miss. Massive miss.
Yeah, it is, and it's in one of the key industries that needs to be.
Well, actually, that's the one that should respond best to QE.
Yes, it should. Of course, it should. It's exactly what it's what it's meant to do, to stimulate demand in those key industries like construction and infrastructure.